이어지는 세션 역시 패널 토론이 진행됩니다. 타이거 리서치 김유진 CEO님의 좌장 진행으로 리플 로스 에드워즈 글로벌 금융기관 수석 이사님과 레이얼제로 임종규 아시아 태평양 사업개발 및 게이밍 부문장님, 그리고 온도 라니아 라 아시아 태평양 세일즈 디렉터님께서 패널로 참여하여 스테이블코인과 차세대 금융 인프라라는 주제로 유익한 정보 제공해 주시겠습니다. 여러분 모두를 뜨거운 박수로 환영해 주시기 바랍니다. 네, 무대 위로 모시겠습니다. 네, 우리 명패를 확인하셔서 자리에 앉아주시면 감사하겠습니다. 네, 스테이블코인이 단순한 거래 수단을 넘어 어떻게 규제된 금융 인프라로 진화하고 있는지를 살펴볼 예정인데요. 크로스체인, 크로스보더 기술, 실물자산 통합, 그리고 기관의 참여까지 핵심 이슈들을 논의하며 각 패널리스트의 전문성을 바탕으로 스테이블코인의 미래와 한국의 기회를 함께 모색해 보겠습니다. 네, 그럼 여러분 우리 토론을 큰 박수로 시작해 보겠습니다. 큰 박수 부탁드립니다.
안녕하십니까. 타이거 리서치 대표이사 맡고 있는 김규진입니다. 오늘 영광스럽게도 이 시대의 가장 핫한 이슈인 스테이블코인과 관련된 모더레이터를 맡게 돼서 감사하게 생각합니다. 오늘 부득이하게 외국에서 굉장히 또 유명한 프로젝트들에서 참가해주신 외국 연사분들이 계셔서 부득이하게 이제 영어로 모더레이션을 진행하도록 하겠습니다. 혹시 한국 참석객 여러분께서는 아마 번역기, 통역기를 사용하시면 편하게 들을 수 있을 것 같습니다. So, ladies and gentlemen, thanks for participating in this wonderful event. My name is Daniel Kim. I'm the CEO of Tiger Research. Tiger Research is the most trusted and most well-read blockchain and Web3 research firm based out of Seoul, South Korea. But we also have presence in 6 different Asian countries. And it's really an honor to be here moderating this session with fantastic panelists from Ripple, Layerzero, and Ondo. So before we get started, I'd like to pass down the mic to give a short introduction of yourself. What do you do, your project, and one thing you love about Korea?
Hi everyone. So first of all, thank you to Tokenpost and all the all the supporters and sponsors of the event. It's fantastic to be here. I'm Ross Edwards. I'm a Senior Director for Global Financial Institutions at Ripple. Ripple provides digital asset infrastructure to enable financial institutions to better serve their customers. We provide those services in the areas of payments, in particular supporting cross-border payments using digital assets for settling 24/7 instant in over 90 different markets around the world. We provide custody technology to custodians and other financial institutions to keep digital assets safe and secure. We last December issued a US dollar stablecoin ROUSD and are working with global partners to increase the distribution and utilization of that stablecoin. And we build on the XRP ledger and XRP ecosystem. Being in Korea, I think that doesn't need too much explanation. It's a huge market here. But we're bringing institutional use cases to that ecosystem, in particular focused on tokenized assets and stablecoins, our own and many of our partners across the world. Thank you. What do I love about Korea? There are many things to love about Korea, but I can't go past Korean barbecue.
네, 안녕하세요. 저도 한국 사람이라서 먼저 한국말로 인사드리도록 하겠습니다. 저는 지금 레이어제로라고 하는 세계에서 가장 최대 규모의 상호 운용성 메시징 프로토콜 회사에서 아시아 태평양 사업 개발을 총괄을 하고 있는 임종규라고 하고 영어 이름은 알렉스라고 합니다. 그래서 오늘은 부득이하게 영어로 진행하도록 하겠습니다. My name is Alex. I lead the regional business development efforts in the APAC region for Layerzero. Layerzero is the world's largest interoperable messaging protocol that essentially facilitates blockchains to talk to each other. I think in the previous panel, the CTO from the CodeVasp talked about how, what if each blockchain was an email provider and you have a Gmail account, and you have a Naver account. It doesn't make sense that an email user is not able to communicate across different email servers and services. Basically, Layerzero facilitates and enables such communication across 140 plus blockchains. So if for an application builder or an asset issuer, whether you're issuing stablecoins, gaming tokens, whatever the asset is, if you build on Ethereum, Solana, Move virtual machine or Ton virtual machine, we can make them all interoperable so that you're sending any values across these different chains as if it's built within the single chain. So you can think of us as sort of the Swift network for the blockchains, facilitating any value transfers across every blockchain. Currently, we process about 70% of the entire cross-chain messaging in the world. About 65% of stablecoins issued by leading players like Ondo or USDT Zero, PayPal, or Wyoming Stable Token are all adapting our universal omni-chain token standard called OFT. So very, very happy to be here. One thing I love about Korea is probably my mom's kimchi stew. 저는 엄마의 김치찌개를 굉장히 좋아합니다. 감사합니다.
안녕하세요. 저는 Rania, and I'm going to switch to English from here. So my name is Rania, and I lead sales and business development for Ondo Finance in Asia. I started my career in Barclays and have been in Web3 for 5 years now. For those who are unfamiliar with Ondo, we are a leader in the RWA space, the real-world asset. We are the first and one of the largest issuers of tokenized US Treasury bills with 1.5 billion in TVL. Just last week, we announced the launch of Ondo Global Markets, where we brought 100 single US stocks and ETFs on the Ethereum blockchain. This means that you can now buy tokenized Tesla, Apple, or Amazon stock just on chain, powered by Ondo. And we're also really proud to actually announce that today, just 1 week after our launch, we hit 100 million in TVL and became the largest issuer of tokenized US stocks as well. One thing that I really love about Korea is I love sundubu. I have eaten sundubu once every day for 2 weeks, and I can still keep going.
Well, thank you very much. I kind of get the vibes around Korean food, the kimchi jjigae, sundubu, and the barbecue. It's almost lunchtime, so. Well, today, so we have about 30 minutes of talking about the stablecoin and the next generation of financial infrastructure. So I'd like to frame the first 15 minutes talking about the current status quo and the experiences that you have had over the long run on generally where traditional finance payments meeting blockchain. And I'll spend the later 15 minutes kind of moderating towards the future, your outlooks and your forecasts. So starting with Ross. So I know we've spoken in the speaker room, but 10 years at Ripple, wow. So I'm sure you have watched, the inception of where blockchain meets financial. I'm sure you and Ripple went through a lot, especially in the US and other jurisdictions. And I think now it's coming to a high time where you can really execute on some of you and your company's vision. So when you meet your clients, partners, what has been the most focused discussions around what you do with enterprises and financial institutions? What are the challenges that you face? And just share us some of your experiences.
Yeah, thank you for that, Daniel. So I have been at Ripple for over 10 years, which is it seems like a lifetime in Ripple and enterprise blockchain. I think throughout that journey, it's very clear that in particular financial institutions have become increasingly comfortable in discussions and working in the digital asset space, particularly now in the stablecoin area. I think it's something that has sufficient familiarity to them and to how it can improve services to their customers that it resonates well. When we started off in the payment space, and I really came in as one of the earliest banking payments experts into Ripple, we really provided technology services. As a sort of enterprise blockchain company, we saw technology as the big thing that we could bring to the table. And I think over that journey, we've learned that institutions and the market more broadly is not just looking for technology solutions, right? They're looking for end-to-end solutions, and that we need to be able to bring those solutions more holistically than just technology. So yeah, being able to add value-added services on top of that technology, from the interoperability of that technology, which I'm sure Alex will talk about the importance of that further, but also the integration through to regulated services. So in today's world, we hold over 60 licenses around the world, supporting our multiple businesses, but mostly focused on the payment space. We provide licensed payment services to financial institutions and corporations around the world, where the initial iteration was providing them a technology set that enables them to directly connect to other partners. So I think what we've learned through that is the power of the network. And I don't mean that in a technical sense, I mean that in an end-to-end solution sense. And really, the best discussions we have is where we can bring multiple products and services that Ripple have to bear to deliver value and to build a network and ecosystem that can provide value to financial institutions and most importantly, of course, their customers. I think where those discussions are at the moment are still at the early stage of discovery, but the critical factors, or the two biggest critical factors I think at the moment, is continued progress in the regulatory space. We know that everyone's aware of the Genius Act, obviously in the US, together with the Clarity Act that's still sort of pending. Those are clear advancements and I think a sort of tipping point, but there's still much progress to be made in the regulatory space to unlock this, including all the way to prudential regulations and capital requirements, which have obviously been, the guidelines have been set by BIS, but there's still a lot of lack of clarity there. So regulation still needs to progress to unlock these discussions and opportunity. And I think the other area is liquidity, particularly where a lot of the end payment delivery is still over traditional rails and through traditional fiat. So you need that liquidity conversion, particularly from digital assets and stablecoins in particular through to end currencies. And that requires additional buy-in from financial institutions. That's a major driver, for instance, of our acquisition of Hidden Road, which is, I think, the largest non-bank prime broker in the world. That they clear over $10 billion of assets each day. And so being able to bring ROUSD, in our case, to a lot of those flows will deepen the liquidity and greatly enhance the ability for us and other institutions to adequately address payments needs using stablecoins. So there's a lot of exciting discussions to happen, and we're certainly looking forward to the future in that space.
I think it's a fantastic experience. I really love how you, for the past 10 years, you went from talking about the technology, but not only the technology, you evolved into providing regulatory and compliance discussions, 60 licenses. That's amazing. If I just have a follow-up question, throughout, because you've been here for 10 years at Ripple, this is like forever, right? Maybe some people and some of the audiences here will feel like, am I too late into the game? Or people say it's still early, but am I on the last, last group of peoples into this? So would you recommend still the regulators, institutions, bankers here to also explore stablecoins and payments?
Yeah, I mean, I think in particular in the institutional space, working around digital assets and blockchain, it is still early days in building, high utility services. I think the last 10 years has been quite a journey. We started at a very early, immature, stage, but we're still really at the precipice of mass adoption, which is going to be driven by institutions leaning into this space. So I don't think it's late at all. I think these operating models and technologies and digital assets enable new forms of business, and I think it's my perspective, and I am slightly biased in this space, but I think institutions need to lean into this from this point forward, or to stay competitive in the future. So I think it would be a key investment, leaning into this space, learning more about this space, experimenting, and most importantly, building scale businesses on this space.
Thank you. It's a great answer. Alex, we've known each other for a while, so it's good to be on the stage with you. I actually didn't know like Layerzero had, I don't know, I think you mentioned 60% of all the
65 to 70.
65%. That's like amazing. Maybe some of the audiences are not so technical, so if you can a little bit explain some real-world cases where Layerzero plays, and also what was your experience with your discussions with your clients and partners across Asia Pacific?
Absolutely. So today's blockchain world is inherently multi-chain. I think on a weekly basis, we're also seeing some new chains being announced. As we all probably know in this room, Upbit just announced their own L2. We saw new chains by finance and payment service providers like Stripe, Circle. While all of these new blockchains, I think, are great for innovation, and I frankly think that all of these new blockchains only accelerate stronger competition among lower fees, faster transactions, and tailoring to more specific audiences around the world, we're actually sometimes ignoring the fact that it is not so great for collaboration. If you look at the early days of the internet, right, there were only few networks that were out there that were truly connected in terms of databases and code bases. Right? If you really wanted to go to a space where the computers are connected, you had Stanford, DARPA, and a few places really in the world. And then you saw this protocol basically called TCP/IP that unified what we call the web today. And I feel that right now, if you combine all of the layer 1s and layer 2s, I believe the number is around 400. And I think it's only going to go up. And I think that's fantastic. But I think somebody in this industry has to solve the connectivity and the interoperability issue. And that is frankly what Layerzero has been pioneering in the past 4 years. So as mentioned previously, we currently support about 140 plus blockchains, which I know that is not the 400, but frankly, there are a lot of inactive blockchain networks as well. So we're all here to really grow the pie and foster the competition. I frankly think that the ecosystem needs to grow faster and further. To speak a little bit more about, my personal experience with asset issuers in the Asian region, if you look at sort of the evolvement or evolution of how bridging works. So how does value transfer work in the blockchain space, right? In the beginning, you saw the arrival of Bitcoin in 2009, which pioneered this P2B decentralized transaction, which was significantly accelerated by the arrival of Ethereum in 2015, which is this computational layer of smart contracts. And then you saw, again, layer 2s and other technologies. And in the middle of this, people had this inherent need for having to move an asset from chain A to chain B. And the traditional, more of a limited model entailed some sort of a centralized security model or a body that says, hey, if you want to move, let's say USDC or USD Tether from Ethereum to Solana or Solana to Avalanche, let me wrap that asset, that particular asset, and produce a new synthetic asset, and we'll call that a wrapped, Alex token, whatever, right? So that you can use this synthetic asset for Solana from Ethereum. Now, the problem with that is that if that middle smart contract gets hacked, your entire asset is gone. In fact, about 60% of the entire Web3 hackings are from the bridge incidents. So this was the critical security risk by every monolithic piece of bridging experience in the past, I would say, 5 years, until Layerzero basically innovated this universal token standard called OFT and invented things like burn and mint and lock and mint mechanism that completely gets rid of the liquidity fragmentation. And every time that I talk to asset issuers in Asia, the focus is less about which chain to deploy on. The focus is more on how do we distribute this faster? How do we maximize utility and the liquidity among the users within the region? And of course, the liquidity fragmentation comes up on the top of their mind. And frankly, that is the first and foremost problem that we try to help with our customers.
Wow, I mean, I really liked how you said, like, out of 400 chains, you're already supporting 150, and how you're connecting all these very fragmented, siloed countries, I would say. So some people metaphorize networks into countries, and I really like it. But since our session is a bit more stablecoin, do you think stablecoins and payments really meets the product market fit for the cross-chain communication tools that you're building?
Yeah, absolutely. I think, maybe I'm jumping ahead a little bit, but the vision that I have, and I think I can speak for Layerzero as well. If you look at Asia in general, Asia represents one of the most fragmented regions in the world. If I just mention, let's say, 10 countries that have existing and potential stablecoin issuers that are denominated on their own national currencies, you have, Korea, Japan, Singapore, Hong Kong, and then other Southeast Asian countries like Indonesia, Vietnam, Malaysia, the Philippines. I think there is a huge inherent interest, geopolitically speaking, let's say from China, to digitize Chinese yuan through Hong Kong, for example, and minimize their reliance on US dollars. And if you look at just a clear use case on the FX market right now, if, let's say, a Japanese trading company or a shipping company is collaborating with a company based out of the Philippines and they want to settle their payment or settle their trade straight directly from Japanese yen to the Philippine pesos, you have to go through a lot of different hoops, including mainly US dollar denominated steps, regulated. So I think that what we're envisioning with regards to stablecoins by solving the liquidity fragmentation is that at the end of the day, if you're sending money, you're sending value, it doesn't really matter what currency you're sending it from. Like if I'm trying to send $100 to Rania to her DBS account in Singapore, I just want to be able to send my 100,000 Korean won and not having to think about all of the currency exchange. And from her end, she just receives whatever that amount is in SGD or Japanese yen, whatever she prefers. In the traditional legacy system, that meant more delays, that meant higher fees, that meant middlemen trying to verify and process every step of the way. And that meant, again, more delays and more fees. And now, thanks to the stablecoin technology, we're able to cut through all of that middleman, right? So in that regard, I think stablecoin is an extremely focused area for Layerzero and our technology. And one thing that is important to mention is that I think, Ross probably resonates with this a lot with all of these financial institutions. Compliance, security compliance is a huge part of asset issuers, right? They're not gonna outsource who gets to validate and verify things like cross-chain communication. So just one last piece is that Layerzero facilitates and enables asset issuers like PayPal, BitGo's Wrap BTC, so that they can run their own validator verification network, so they have a complete control of the cross-chain communication of the asset they issue. So I think that's what differentiates Layerzero from other, let's say, cross-chain service providers as well.
Thank you, Alex. So kind of moving on to Rania. So I think it's really fascinating to have you here because, Ripple, Layerzero, they provide underlying infrastructure technology. I know Ondo does provide underlying tokenization technology. So share us some of your experience with your clients and partners on discussing what's their concern, where did they see in the opportunity, and I really want to learn a bit more about yield-bearing stablecoins. It's a fantastic, innovative product that's just been in the market only in the past 10 years or so.
Yeah, thank you, Daniel. So what Ondo is really known for, we're the first and the largest issuer of what we call the yield-bearing stablecoin, i.e. the tokenized treasuries. I'm very happy to be on stage today with a few of our partners. We are integrated on multi-chain, 10+ chain for our retail version, 3 chains on our institutional one. Ripple is one of them that we've actually deployed on. We do use Layerzero as well to help us with all the bridging and all the cross-functionality that Alex has mentioned. I think one thing that I really want to emphasize and touch on is building on what Alex also have talked about, which is distribution, but also utility and why we have the need for yield-bearing stablecoins. So I think stablecoins, the way we see it, is the first RWA, real-world asset, that really achieved product market fit. And some people may not realize that. They think the RWA narrative only came about with tokenized treasuries. Some players did real estate, some private islands, all sorts of things you can tokenize. But really, stablecoins has been, I think, a cornerstone of the crypto ecosystem and financial system as well. It's really just a tokenized form of the US dollar. This is 300 billion in circulating supply today, but still a very small fraction of the actual fiat US dollar in the real world. And we actually noticed that a lot of these stablecoin issuers decided to actually just invest these reserves into treasury bills and keep the yield for themselves. And we thought, actually, why can't holders of stable coins, ourselves, I'm sure many people here hold USDC, USDT, actually get the native yield? And so that's how we came about with this concept of tokenized treasuries. But I think one thing that's very interesting about the yield-bearing stablecoins is you can do so much more with it. It's not just a form of static, cash treasury management system, i.e. you can just sit there and let it do the work. You earn 4.2%, almost pretty much risk-free interest, but you can use it as a form of payment on Solana, for example. You can also use it as collateral on certain borrowing and lending protocols, on all the various chains that we're integrated with, Ethereum, Solana, Sui, Arbitrum, etc. So to me, this is a very unique and actually superior form of money, that you have one single product that can be used for many sort of different use cases. And this is one of the reasons I think why this RWA narrative have become like very popular. Holders realize that actually there's just so many ways that you can use it.
Utility and distribution, I think it's really two good keywords. But if I have a follow-up question, like with 4% yield, do you sometimes get like, I don't know, reluctancy from institutions or trust issue when you say if you invest in this stablecoin, you'll get a 4% yield? Like, how has been your experience?
Yeah, really great question too. So I think the truth is a lot of holders on chain are, if I may say, quite greedy. So they don't like 4%. They want 40%. They want 4x, 40x. So when I tell them, hey, you get 4%, sometimes they look at me a little bit confused. But the truth is, I think, in 2022, we've seen a major cryptocurrency collapse. Back in those days, I think lots of projects were offering these high returns, but users never really ask or question where is the yield actually coming from. But after that, these days, holders are a lot more cautious, a bit more sophisticated. So they start looking at things like security, stability, and this is really where I think Ondo has a real edge. The way in which we structure and design our products are very regulatory compliant, they're very safe. So yes, 4% may not be the most attractive yield, but it is at least, safe, and this is what some holders actually really want. They're not looking for the high returns, rather safe. So one thing very unique about our yield-bearing stablecoin that's different from some of the traditional stablecoin issuers is what we call the bankruptcy remote design that we have. What this actually means is holders of our tokenized treasuries have a direct claim in our underlying assets, even if the issuer, i.e. Ondo Finance, ceases to operate even tomorrow. We get an independent third-party agent that conducts daily audit to ensure that our assets are always over-collateralized, that we can always meet our requirements of withdrawals, redemptions, etc. And once we fail to meet these obligations, they can actually seize the underlying assets and return all of this to users. And this is one really key, component of our design that's very appealing to users who want safety. And this is one thing I personally think is really interesting and unique about the RWA space, which is we combine these protections we see in the traditional financial world, but also with all sorts of on-chain utility that I mentioned, like DeFi use cases, permissionless nature, composable, etc. And I don't really think there's any other product out there that actually has the best of both worlds in this way.
Thank you, Rania. So I think spend more than 15 minutes to talk about the status quo, what is happening today in the front lines of stablecoins and payments. Well, I want to spend a little bit about the future. A lot of audience here to listen to industry leaders. So Ross, what do you think is the most critical thing that's going to happen or forecast in the next 12 months? What do you think are the opportunities, risks? If you have any action items that our audience can take over today, feel free to share.
So over the next 12 months, so I think obviously we've seen the Genius Act passed and be signed in the US. I think that that's going to drive a new level of standardization on stablecoins in particular. The Clarity Act is a bit separate but also useful, but I think this is going to dare I say it, make stablecoins boring, right? Stablecoins at the moment, everyone at the sort of retail user level sees it as some sort of homogenous group. The fact is, it's very heterogeneous. A stablecoin is a stablecoin is a stablecoin is not true at all. We've seen that in the algorithmic space over several years and several failures. And it's also true of reserve-backed stablecoins. It just may not be evident until there's some sort of duress. So I think what the Genius Act will do is help define high standards, and that's what part of what we like about the Act. Standards for issuers. It's based off the MYDFS Trust Charter structure, which is how we issue our stablecoin, and sets a high standard on that space, and it makes meaningful, or takes meaningful steps in the consumer and investor protection space, particularly around processes and rights and obligations under bankruptcy and redemption requirements. So this is going to, I think, make stablecoins boring and make what you can do with stablecoins the most interesting thing going forward. It will have an effect globally, it will have an effect here in Korea, which I think will be positive, and it will better enable institutions to lean into this space and build services on top of stablecoins. And I think this will all happen very rapidly over the next 12 months. And I'm certainly excited working with many of the financial institutions out there in this space. I think a huge topic, which obviously Rania touched on, is the balance between transactable assets, which is what stablecoins are, and yield-bearing assets. And I think that that's going to be a super interesting topic. And the biggest banks in the world are looking at this as an opportunity, whether that means yield-bearing stablecoins or means some other form of relationship between these types of assets remains to be seen. But I'm certainly excited to see progress in that space too.
Boring but safe with mass adoption. So I think I actually agree with you. So thank you. Alex, turns up cross-chain communications, same as Ross. Like, what do you see in the next 12 months? You see a rapid change, opportunities, risks, some homeworks or action items for the audience.
Well, I think issuing a stablecoin is gradually becoming easier and easier, like certainly from the technical standpoint. In that regard, in the grand scheme of things, it's going to be less about assets. I think stablecoin as a whole becomes more of an infrastructure, and it becomes a strategic part of the strategic financial policy of every meaningful economies in the world. I mentioned briefly about Asian stablecoins, but I'm particularly very excited about creating this FX market on chain so that institutions and retail investors for use cases such as cross-border payment, cross-border remittances, global commerce, these things are finally going to become the ChatGPT moment of the blockchain. If you break down the crypto or blockchain industry, I think Chris Dixon pointed out in his book where you break down the crypto space into casino and then computer. If you strip away the casino, which you have to, because no matter how hot the market is, you can't send the stablecoin to the moon. It'll always stay stable. I think it's finally a defining moment where, thanks to the stablecoins, we focus on the technology, we focus on the real use cases. So in the next 12 months, I'm looking forward to seeing markets like Hong Kong, Singapore, Japan, mainly these three really materializing with the existing stablecoins being into fruition with a lot of institutional and retail use cases. I frankly think that Korea has a long way to go in terms of the regulatory framework, in terms of how do we mitigate the relationship between the central bank, the commercial banks, and the IT platforms. There's so much noise in Korea. That's what I love about it. But I think that ironically, we should be so careful and meticulous about how we really harness this piece of technology. So, and one last thing I'll say is, if I may, extend the time horizon a bit, in the next 5 years or so, I think the next biggest stablecoin issuer or the most meaningful stablecoin player in that regard isn't necessarily a Web3 player. If you look in the Asian economy, which is completely digital, by the way, our lives here in Korea or in Singapore or in China and Hong Kong are essentially run by a few super apps. You look at Kakao, Naver, the Alibabas of the world, WeChats of the world, and Grabs of the world. They have the most amount of user data, user trust, I think it makes a lot of inherent sense for them to issue stablecoins and internalize a lot of the point systems and loyalty point and stuff like that. So I think that I'm excited to see this amalgamation of the existing traditional and Web2 players and through this layer of stablecoin as an infrastructure, not so much focus on the asset itself, will unlock a lot of the convenience and lower fees and real values driven by crypto, which I'm really excited about.
Thank you, Alex. So, Rania, I mean, Ondo providing its world-class, innovative products, yield-bearing stablecoins. What do you see as the next 12 months, biggest changes, opportunities, as well as a bit of spice on is how do you see financial institutions adapting new type of products that that you're building right now?
Yeah, I think so. Really, there are two parts to this question. For the first one, what we're really bullish about seeing the next 12 months, definitely enabling mass adoption and distribution of the tokenized public securities. As I mentioned, last week we did our launch of the Ondo stocks, and we've already seen really good traction, 100 million TVL just in 1 week, but it's still a small fraction of this $1 trillion market in the real world. So I think there's still a lot more work to do on that front. Launching on Ethereum is the first step. We also plan to go multi-chain and and ensuring again more utility and distribution, all the things we talked about. In terms of what financial institutions are really thinking about, we've definitely seen lots and lots of players coming in tokenizing their own money market funds. I think BlackRock was one of the first to do it securitized. We work very closely with them, but increasingly we've also seen Fidelity, WisdomTree, Franklin Templeton, and a lot of Asian-based partners as well out in Hong Kong, China, or South Korea also looking into this. I just think we're actually just getting started. This whole RWA movement is still very new, and can't wait what we'll be talking about in 12 months.
It's just getting started. So I think I've had a good management of time. So 15 seconds less. Thank you very much for the panelists for being here and sharing your experience and sharing your insights and your 12 months outlook. 바쁘신 시간에도 참석해서 감사드리고요. 다음 세션 또 중요한 세션들 많으니까 경청해 주시면 감사드리겠습니다. 감사합니다.
네, 좋은 말씀해주신 김규진 CEO님, 로스 에드워드 글로벌 금융기관 수석 이사님, 임종규 아시아태평양 사업개발 및 게이밍 부문장님, 라니아 라 아시아태평양 세일즈 디렉터님께 다시 한번 힘찬 박수 부탁드립니다. 네, 이렇게 스테이블코인이 규제된 금융 인프라로 진화하는 그 과정에 함께하고 있음을 체감할 수 있던 시간이었습니다.